Welcome to a sub-series of the Share the Wealth Show. This is called Microfamily Millionaire, where I am sharing my journey on becoming a millionaire in small multifamily. So today I actually want to talk about types of lenders. What is a portfolio lender? I don't know if a lot of people realize or know what that term means. A portfolio lender, when I first heard it, I thought it meant a lender who will put multiple properties under one loan, like a portfolio of properties. Normally, when you hear the word portfolio, you think of like a bunch of different properties that are not like on the same tax lien, but are sold as one package, right? A package. So a portfolio lender, I'm thinking, okay, it's a lender who will lend a loan on a portfolio of properties. That's actually not what a portfolio lender is. So that you know, next time you're talking to other people in the investing world, portfolio lender are financial institutions that originate loans, but they keep them in-house for servicing. They service their own loans. They don't sell them to the secondary market. They don't sell them to other financial institutions. Instead, they retain them on their balance sheet, and they earn the interest on those loans over the lifetime of the loan. So, what normally happens in lenders who are non portfolio lenders is they package your loan together, or they package your loan up, they give you the loan, like they fund it, and then they sell that loan to the secondary market so that they can get recouped their cost. And most of their fees, loan processing fees, are how they make their money. They don't make their money on the interest over the life of the loan. They make their money by all the fees that are associated with even creating the loan. That's why there are all these loan processing fees. The difference is when a bank or a lender is packaging the loan product that they're giving to you to sell to the secondary market, they can only sell loans within a certain box. It has to fit a certain criteria. So if you do not fit that certain criteria, you're going to have a lot of trouble getting a loan from a non-portfolio lender because you don't fit in the box, right? And they need you to fit in the box so that they can sell your loan. Now, non-portfolio lender, they're not worried about what the secondary market thinks because they're keeping those loans in-house. So they have a little bit more flexibility with terms. So that's why you'll hear a lot of investors saying to go to small local or community bank, because those are the ones that are normally portfolio lenders. And you would can just ask each lender when you go in, or hey, do you hold these notes here, or do you sell them to the secondary market? And they'll be able to answer the question for you. But the other thing, if you're a newer investor and this is your first loan, even with a portfolio lender, they're still going to give you particular loan products that are within their normal guidelines. Once you start building a relationship with them and you're able to close multiple loans and you have a relationship with, president of the bank, which is actually not hard to get to when you're looking at smaller banks. It's not unusual to talk to a VP or president on a consistent basis. But if you're newer, you're going to be in this normal guidelines, but you'll get a little bit more flexible terms once you establish that relationship with them. But they do have that ability to be a little flexible. So maybe you can go look at a couple of commercial lenders in your area, or small, not commercial, but small like community banks and local banks in your area, in whatever market that you're looking for property, and then talk to them and negotiate with them and kind of say, hey, John over at such and such bank said that he could do XYZ loan terms for me. Are you able to match that? Because I would rather do business with you over here. But what's up? So that's a way that you can kind of like, I guess, go around and see how you can get the best terms for your loan. But looking at the smaller portfolio lenders, commercial or community banks, is going to be a better bet for you as a newer investor than even going to the big box banks. So just something for you to keep in mind. Portfolio lender does not mean that they lend one loan on a portfolio of properties just because somebody's selling a portfolio of properties. Sometimes you still got to get the loans individually. And another video, I am going to talk about whether that's a good or a bad decision to get one loan for multiple properties. All right, see you next time.